Good day, everybody. Brian here from quantlabs.net. I wanted to put together a PowerPoint slide deck just to summarize where we're at on things. This is pretty, in my mind, pretty revolutionary where we're at. Um, Again, PowerPoint presentation. Here we go. So what I'm going to talk to you about is an AI-driven trading. This is basically from AI-generated reports that focuses on futures and options. So these go from from the reports to an actual live trading dashboard, and you can get the source code as well, mostly in Python and the HTML front end. So there's a fully automated process that I've built over the last few months, and it focuses focuses only on futures and options using different types of analysis. So uh, what we're looking at is basically first version, first cut of the vision. As I said, we're going from automated trading intelligence, where there's a focus on what I'm about to show is 100% AI generated. All the reports, as I said, are AI generated to a summary analysis. And then we can use that summary analysis to basically culminate potentially live trading bot dashboard. And I've shown various videos on that. Um, if you click on the link in the description, you'll be able to get a complete blog post of the entire process and the dashboard, just one snapshot that can be generated. And this can be generated anytime, any frequency, weekly, daily. Probably weekly might be best. Yeah, we can do it on demand, however we want. So we're just generally demonstrating the power of this AI in what is becoming a new modern quantitative world of trading. Okay. So what we're looking at is to build out a set of core assets, asset classes, right? So there's a strategic focus here. So as a result, we can have futures and options on futures. That's the critical thing here is options on futures. So this can cover across various domains, including institutional players, hedge funds, HFT shops, and the like. The more capital you have to deploy these type of strategies, the more options you have available to you. If you're coming in with a limited budget or a limited account, obviously you're going to be restricted. So across the space with the futures, we're covering everything from financials, currencies like yen, euro. We can also throw in commodities like gold, even crypto, Ethereum, Bitcoin, and soon, next few months, Solana XRP. And it's basically built on what the CME does. We can also focus on market indices, not listed here. That's, of course, the S&P, NASDAQ, and the Russell. So as I said, with the options on futures, these are not options on equity like stock options. Uh, the crucial part here is we need to get access to real world, true option chain data. It's crucial and it's very, very expensive, ranging anywhere from 2 to 4 thousand a month. So as we move towards that, that's where I'm going to go. Um, and obviously, this type of service become even more expensive monthly. So with the report volume that we can generate via the AI 37 to 52 individual asset reports on average. So that's across all features available. And again, if you go into the description, there's going to be a blog post that will show you sample reports of what I'm talking about here, and then obviously the summary as well. It comes out of those, I don't know, 30, on average, 50 reports in full detail. All right. So it's all powered workflow. Here's a step-by-step process. So we have individual AI reports, and that's again per asset. So we get detailed analysis for each of them, roughly approximately 50 of them. Could be future ES futures, options, as an example. Basically, the content contains volatility, chain data. That's simulated. As I said, it's better once we can get into a true option chain data, once we can figure out the source and finding an affordable source as well. So also on top of that, we do a Greek analysis, we do call put parity, we do risk frontier, we do risk payoff diagrams of various types. This also helps identify all the different types of strategy options that we have, be it bullish, bearish, neutral strategies like iron condors, butterflies, hedging opportunities, arbitrage. And again, really important to stress is at this point right now, it's all simulated for demonstration only. And as I said, real option chain data is pricey. So with the AI summary report, that's the next step. We can basically compile a conclusion, but in detail here. These are all built using AI. And again, each individual report is also built by AI. And then we just feed it into another AI model, like an LM. Depends upon what will build it. Then we can generate a comprehensive summary. It's about 15 pages. Again, I can provide a sample to you in that blog post found in the video description. And basically, it highlights a series of approximately 15 tradable assets from the initial 20, from the initial roughly 50. And that gives you uh, what's tradable based upon volume liquidity. So obviously, it's going to focus on volatility, arbitrage, hedging, put call parity. And there it comes out of it as an AI powered workflow. Out of what I've already previously explained in the previous steps, we can then get further AI generated trading dashboard where we're able to take all the insights from that report, generate a Python code backend with an HTML front end for simulated trading dashboard. Now, we can also connect it for live trading and connect it to all the major um, interactive brokers, broker. We can also do it to whatever, but 90% of everyone's doing interactive brokers. So we can add on live trading pieces that will connect into, let's say, the trader workstation as well. So out of that, we can also build out visual portfolio positions, profit loss, and even potential strategies. And I've got various videos, demos of that. It's really powerful. So here, as an example, if we gave you one of the more popular options for futures is ES, which is the S&P 500. So out of that, what we're looking for is to build out key analysis points. So out of that, we're looking at volatility. We want right now, depending upon your profile of risk, you might want to go with low risk, um, volatile assets. In this case, let's say the ES, S&P 500, to be 19%. We look at the option chain data. Although it's simulated, it's crucial for the analysis. We then from there build out Greek analysis and call parity, which is pretty kind of essential for how high frequency trading shops do it. And that's part of the focus and what drives this. And what they do is they're basically looking for an equilibrium between the cash price and the future price. Out of that, we can build out a risk frontier and build out potential option trading strategies that could be bullish, for instance, long call, long put, a long call short put, or bull spread, could be bearish, um, with all payoff diagrams, of course, neutral, be it iron condor or iron butterfly, which are fairly complicated. And then there could be hedging strategies as well. And then we can establish maybe a futures floor price, which is going to limit your downside risk. So that we can also look at potential arbitrage opportunities and identify and specify them. So the general emphasis comes out of this is that the data is more important than the visual plots. I mentioned before in a past video, we could use only the data, but this is just general using these Word report documents. And then if the futures data is accurate, um, and that's being generated from interactive brokers, the data, which is fine. It's the option chain data, and that's where it's simulated. So the next thing is with the deep dive AI summary report, we then can do a variety of things. So this is again an AI summary report using approximately, generally on average, 50 individual AI generated asset reports. Out of that, the AI analysis will focus on what a lot of institutional trading desks will do. They'll bring about a thematic set of groupings. So it's theme based. built around metals, energy, agriculture, financial, currency, and even crypto. So, as an example, we could identify things where we could focus on high volatile assets like Ethereum, Bitcoin, some metal, uh, or if you want and you have a lower risk profile, as for a lot of people that go into retirement or about to do that, you focus on the low volatile assets. And again, another key here item here is you want to correlate it from things like in current day, anything that might be very volatile and not looking great down the future. You might want to look for things that are based around uncorrelated to U.S. Treasury because of high debt of the country, U.S. currency, U.S. dollar, because of its risk that brings, and on top of the markets themselves, the stock markets, because they're too volatile. So we can kind of do that in the analysis, just basically feeding it via the prompts. So out of that, we get a further deep dive AI summary report. So again, the analysis continues where we're able to identify different opportunities. So we could focus on things like volatility skew. We could look at maybe arbitrage opportunities, be it in sugar, copper, gold, ES, 2-year notes, euro. We could also look for any put call parity violations, which is again that institutional focus. So if we want to generate C++ code for strategies, we could do that. Obviously, for high frequency trading focus, but that you can't really do it with a stockbroker like Interactive Books. You have to be really trading directly through the CME for lower commission fees. But again, you have to have a larger account size as well. So with these type of reports, we can build in AI reasoning because the AI is getting so advanced now. We can put in a said reasoning, so that will be able to provide you a rationale for a variety of suggestions. Do this, don't do this, because, and it's very specific. So now this is doing things of what you would expect from a high-paying portfolio manager would do, and it's very specific where to go. So the output then becomes this: here's the strategic advice. We can build out portfolio allocation suggestions. So as I said, we could be at a $10,000 mock portfolio, or it could be 100,000 mock portfolio. And the higher the account, the more options you get as well. And the AI will take care of all that for you, built around the portfolio size. So this we can customize as well. I can also generate trading ideas using the same process for individuals. I'll talk about that in a minute. So here again, with the AI generated trading dashboard, I've shown various examples of, and it's very specific on what these reports build out. So the whole idea is it's not just to simulate and monitor trading strategies derived from this AI analysis. It's to actually build out a true live trading strategies or set of strategies built around um, live portfolios. And this can be from an institutional level as well. So this can be built again for live trading, but we have more accurate, real option chain data. For sure, we can do live trading as well because the AI is so advanced now. So again, here's some examples. I've shown this, and I want to put this in part of my post. Let's say in a sub portfolio out of the 100,000, the AI says we're going to now allocate $40,000 in this sub portfolio. The AI, the dashboard can show the cash, the profit loss, the available assets, be it in this case, as part of the example, could be soybean, gold, NASDAQ, and S&P 500. There could be various strategy types suggested based around speculation of the option chain data. It could be a directional, could be a pair trading, could be a manual trade. And we can build that as well as part of the dashboard to enable manual trades, believe it or not. And an active option chain display data to a live environment. I mean, this thing is so advanced, but this is where we're at right now, only using simulated data. So the technology stack we're using typically would be Python based backend with an HTML front end. We can build this in any language we want. The problem is if it's say C++ with no front end, we have no restriction. But some people may want a C++ front end which then limits your uh, what can be generated. So it's better to keep it Python and HTML. But if it's high frequency, yeah, you could do C++ as well with the live trading pieces as well, connecting into, let's say again, interactive brokers via fixed connection, let's say, as an example. So the goal here, what we're trying to do is we're trying to build out multiple dashboards at that current snapshot when it's generated. So we could do one dashboard with all the programming, live connection, all that. Next week, we can generate another new report, wholly different system generated for the following week. It's that advanced. We can do that again on demand. We're not dependent upon some kind of wrapper service. We're interacting directly with various models and LM to generate this. Okay, so this is very dynamic. And again, in this case right now, it's only built around simulated data. And again, even though if it's real data, it's only for demonstration purposes. All right, so we've got an AI-driven portfolio. Let's say we're going to allocate $100,000 to it. And again, if you're an institution, $100,000 is pocket change. You know, you could be given a quarter million, half a million, maybe a million, just to test it out. And if you get really good with this, obviously that account size grows. So part of this, the core principles is as suggested by the AI, is to diversify across different sectors again, metals, energies, agriculture, financials, and currencies. We can also build in the risk tolerance and the market conditions, which are key at that time when it's generated. So it's not static where you could have a crash one day, and then the whole market regime changes, and then again we'd have to regenerate new reports built around the data and build out new trading strategies, live trading strategies, potentially with new dashboards, new backends, and generate all of that. So that can be done on demand. So uh, part of the sample allocation, which is very important, let's say in this case we have 100,000 available, we can generate $15,000 or 15% just to focus on cash futures and doing arbitrage among gold, ES, E-mini, silver, and focus on the, I don't know, let's say the put call parity, if that's what the AI suggests. We can also generate, as I've shown before, 40% allocation with directional and pair trading. That could be a combination of long, let's say long crude oil, the hedge, short soybean with a hedge, and maybe do a pair trade between a long ES and a short NASDAQ, just as an example, because it would make sense with the big tech dropping. Okay, so there's that. So then we can also apply maybe a 30% allocation and only focus on option specific plays. That could include high volatile, long strategies on Ethereum and natural gas. 7,500 dedicated to that. Low volatile with iron condors with a Canadian or a Japanese currency. 7,500 dedicated to that. We can then focus on the skew risk reversals on silver, let's say, $7,500 on that. We can then generate a directional spread between corn and let's say copper, 7,500. And that again is because the AI is able to identify that pair, that spread, because of the data we feed it. Then we can also apply maybe 15% cash reserve, build out the margin, and have new opportunities, and also figure out if there's any potential adverse movements there as well. Ooh, that's quite a bit. So here's the key components from this, being very importantly emphasized by the AI. We could do volatility analysis, identify high versus low volatility assets from four different strategies. We can also identify for arbitrage, especially between put call parity violation. And again, this could be, which is part of that analysis, which is the focus of high frequency trading shocks. We could also do option future synthetic arbitrage. We could do specific for hedging, for optimal hedge, using optimal hedge ratios and able to also reduce the variance as well. That is like that's golden right there. I mean, also we could focus on option strategies only. We could build out straddles, iron condors, risk reversals, or spreads. We can exploit the volatility as mentioned based on skew. If you have a higher implied volatility for inputs versus calls. We can also build strategies around theta, which are time decay strategies. Here we can also, it will suggest the diversification and risk management, which is crucial for any portfolio or any sub portfolio. Also, the important thing you to take away from this is critical warnings, and it's critical, and considerations as well, which are mentioned part of the summary reports. So again, because we're using simulated data in this case, all the reports and dashboards data are for demonstration only, and real-time data execution and market conditions will give you different results. We also have to factor in various transaction costs, slippage. It's not fully accounted for these simulations, so if you're on interactive brokers as your broker, that's one thing, but you're going to get a different set of scenarios and suggestions because if you're trading directly through the CME or the ICE, that's a different set of scenarios. Also, for the ARIMA predictions, we could use also, but ARIMA's popular. Again, this is just one example where it's a comparative guide against everything, and it's not a definite forecast. Again, we measure liquidity, so the AI will pick out, as I said earlier, the higher volume instruments due to the liquidity, faster fills, as an example. We also have to factor in dynamic nature of the markets. The market conditions change drastically under, as we've seen last month, and we also have to do this probably every week, every day, maybe. But the continuous analysis is vital and to generate new strategies. Everything has to be forward looking. Everybody in the world of smart money knows this. Not looking at today's market, not looking at yesterday or historical markets. We use the market historical data, yes, but we focus based around that to build out forward looking guidance. And we prepare for future conditions, not past data. Also, which is important to have the human oversight, so it allows traders to adapt and manage. You can't just let this run on its own. Okay. Now, again, this is the power of AI in today's era. I'm using the latest experimental AI models, and they work great. Um, and they're the most advanced. These are not typical what retail uh, traders may get access to, or just regular people. I use, I don't know, close to 10 different AI models, be it from China or the US or even the French one as examples. Out of that, we get efficiency. So we are able to process huge amounts of data very, very quickly. Also, we are able to get that insight generation, which help, again, identify the complex patterns of the markets, build out the arbitrage and hedging opportunities. Out of that, we are able to generate strategic formulations, specific trades, portfolio allocations with rationale built around what the AI suggests. There's also, as I said, the code generation, the source code generation. The youngins call it vibe coding, but we've also got the experience to be able to validate this code and be able to generate creation of all variety of tools, variety of trading dashboards, a variety of different trading backends with live trading attached to it. More importantly, we're using institutional level analysis, not what you get from uh, the frat kids on YouTube. This is institutional level, okay, using advanced AI. The insights typically are for large firms. Again, example, put call parity, which nobody talks about. But that's critical. Smart money knows that as well. Part of the other thing is we've got to continuously learn. So out of this whole thing, the process, the workflow can always be refined when you provide more intelligent, maybe more useful data, and then it will provide the feedback. So what are your next steps to engage with all this? 24 minutes later. So on my website, quantlabsnet.com, building out this is the new future for the website and also to segregate out from the rest of the crowd and obviously to focus more on the smart money crowd, be it from trading shops or ultra net worth users and customers. We got thousands of people in my database now. They're out there. So when you're on the website, you want to sign up under the Learn tab or on the front page. Out of that, you'll get your ongoing insights for everything possible crypto, news, all the other different sectors I already mentioned in this presentation. The important thing is for you to engage with the emails. You got to open them, link with them, click them to identify my system to know what you're interested in. This is the key to being subscribed. It's all via email. Soon I'm able to build it out via a custom app. Just depends on the number of users. And that's going to be another world to be part of with a custom native app, be it on Android or iPhone, iOS. We also have the ebook available. So if you're interested for the C++, HFT, see how these firms build around these technologies, that ebook is part of the call it the bonus free to sign up. So this is where it's becoming chargeable. Okay. So there's two groups. There's a quant finance group. This is where you get access to the actual generated reports. Sorry, the quant finance group. So that is where you get access to a variety of data, the AI generated reports in Word document format, and you'll get access to that among other things. This is the one for programmers or those that understand the technology, namely in programming. Um, Most of what we're generating right now is Python and HTML, and that's within the quant elite group. Obviously, it's more expensive. And out of that, I'm going to include C++ as well. It just depends what people want. Here, we're able to help implement trading ideas, not just what I've already mentioned, but further trading ideas, implement them, and as a community, human base, real people behind a paywall, and you'd be surprised some of the high performing, high achieving traders that are part of this group, what they come up with and what they actually contribute back into the group. So again, important note as this we start to build value, and specifically once hopefully we get to the point where we're using real option chain data, the prices of the memberships will change and they will go up a lot. All right. So that's important to factor in as well. So here's the conclusion. Um, the AI revolutionizes this basically what I'm talking about is the start of it, where it's revolutionizing quantitative trading, both the analysis and strategy development. Um, what I'm demonstrating here is the process to showcase a very powerful end-to-end AI-driven workflow. It's powerful. The AI tools require a lot of understanding. We have to carefully implement and have that continuous oversight. But here's the thing. The future of trading involves a synergy between human expertise and artificial intelligence. That's what we're building behind these memberships. Okay. So again, thank you for watching, and we'll leave it at that. Over and out.